Good morning, traders and investors. Thank you for tuning in to Pre-Market Prep. Today is Wednesday, January 29th, 2025. Pre-Market Prep, a place each morning you can get great trading ideas, you can get overnight news, you can get breaking news, and also, probably most importantly, some great education each day. We got a little earnings bonanza going on here, folks. We are in the heart of earnings season. The guys backstage right now, they're a little bit more excited about the upcoming earnings later today and tomorrow. Got an important Fed meeting at 2 p.m. here today. We got a nice discussion. The guys are talking about on Nvidia, some of the price action in Nvidia and what it means for retail investors and what it means for institutions. At 8:35 a.m., we got a guest from Wedbush on Wedbush Wednesdays, Moshe, Katri. Let's get to some price action in the markets. But first, folks, let's run that intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, filled that earning or the deep seat gap right away. We're down just one handle, 60.96. Buck on the rebound, up 30 cents. Going back to that 50-day moving average. TLT up ahead of the Fed meeting, a quarter at 88.44. USO flat, 78.83. Gold GLD down slightly, 47 cents at 254.71. SLV silver ETF trying to get over 28, up 28 cents at 27.91. And Bitcoin back over 1,000 on the futures. That's up about 1,100 at 102,300. Let's bring the guys on the stage. Just hope you guys have your ears just like ready today, because we are going to be firing through so many topics. The boys are fired up. What's going on, Triple D? How many rants are we going to have today?
It's going to be one big one. It's going to be right off the hop here because,
Let's go.
and I want, so again, we have a lot of earnings today, but there's only really a couple companies that are really moving the overall market. Tonight, obviously going to be a lot of major movers with Tesla, Microsoft, Meta reporting tonight, Apple, Amazon tomorrow. So 5 of the Magnificent 7 reporting in the next 24 hours. But what I want to just, talk about, sometimes, we just need to say that the obvious trade is really to follow retail. Why? Because retail, when I started trading back in 1999 professionally, I started, retail myself in 1996. Retail was about 10% of the overall market, maybe 11%. It really wasn't a big piece. And retail was always known as like the dumb money. You just fade retail. They don't know what they're doing. Everybody just wants to trade against them. They're all the dumb money. Things have changed in 2025. We haven't had an evolution of markets. And retail is now, I was looking last year, estimates are up to as much as 26 to 27% of overall market volume. So you can see it's just increased substantially. But it's the voice that they have. Social media has given retail this voice that they can get their ideas out there, and they can talk amongst themselves, and they can group together. We saw it with GME, 3 or 4 years ago. And what does retail like? They like stories. They like sexy, cool ideas. They don't like value, like where you look, oh yeah, old stodgy GM trading 4 times earnings. They're just not into those stocks. So what do they do, and what is their number one strategy? And that's what I just tweeted. What is the retail's number one strategy? I'll ask the chat because it's an obvious one. I think Christian's probably going to know. I think Joel's going to probably know it. Oh, yeah. What is retail's number one strategy? Let's just see if they can get at the chat. We'll leave that out there for a second. But bottom line is it's hard to fight retail because they are powerful, much more powerful than they used to be. And Joel, you were making a fantastic point too. Is that it used to always be, what is the institutional money doing? What is the smart money doing? The institutional money, I think in a lot of cases, follows the hot stories now. They follow retail.
Oh, yeah.
I mean, retail has such a good voice. And the first one, Eric, is all over it. BTFD, the number one strategy. They're all over it. The number one retail strategy is buy the dip on the stocks you love. What is some of the most loved stocks, Christian, out there? Well, Nvidia gets a $600 billion sale. It takes literally one day. It looked to me like it was going to take out the low, and I thought it was going to go lower. Nope. Retail comes in. They can't help themselves. My entire Twitter stream was just full of people buying the dip in Nvidia. They're like, we have to. And I saw even stats saying, something like $600 million or something was thrown in by retail trade. I don't know how they come up with these numbers, but it's just, buying the dip is their number one strategy. It's hard to fight that. And also in the fade trade here, which I've been talking about, buy the dip is a core strategy. Sell the rip, buy the dip. That's the fade trade. So shame on me for yesterday for trying to get a little bit bearish, because we literally got hammered. I should have just been all over buying the dip and should have had a great day, and I did not do enough dip buying yesterday, Christian. What did you do yesterday? What are your thoughts on this whole conversation of retail maybe being the most powerful group of traders on Wall Street now?
Good morning, everybody. And by the way, it should be another quiet day today. Not much going on. This week has been so slow. So that's my one bad joke. I get one bad joke a session. It's been a really, I'm joking around here. It's been a remarkable market. I mean, this market, if you're not on your toes in this market and looking for on the road ahead, you're kind of getting beaten up a little bit. You got to keep your eyes on the road, because yes, the semis were very interesting in the first half hour because they actually started to go lower yesterday. What I saw, what I was picking up on, and I'm going to just share the screen.
Sure.
If I let's see, IGV versus SMH, but I was blown away by the movement to semi stocks. Let me just try to do this.
Yeah.
Add to stage here, and I want to bring up IGV versus SMH.
Sure.
Such a rotation that was going on within tech. Now,
wow.
This was the semis did come alive. Like after the first hour, they started to get that, to your point, buy the dip mentality. And we were talking about this before. I even like to let the dust settle. Like sometimes, like after a bad earnings report, it's the 3-day rule. Like let the bad news kind of sink in a little bit. So that's what I've done over the years. But to your point, Dennis, it is so fast. Like this market doesn't want to wait 3 days.
No.
By the dip and let it settle in, because I thought you were going to see a lot of trap longs, and maybe that's what it was like in the first hour. Because if you remember yesterday, everything was bouncing in the semis, and power generation was bouncing pre-market, and then boom, it got hit in the first half hour, but it recovered quite nicely. I just want to talk about this chart for a second, because this is IGV software versus semis, and you could see the massive move. And we specifically talked about this a couple of days ago, how more competition to AI is actually a good thing as long as you're not the AI supplier. If you're not the semis, if you're the software, or if you're a group that uses AI, this getting more competitive and possibly cheaper, because we have news on Baba too this morning with their AI model too, but just caused a massive move into all kinds of software names and also cyber names too. So if you want to look at this, I thought the big theme yesterday was rotation within tech, because we did not see, and some people were talking about like how severe the sell-off was, but it just was money sloshing around and moving into areas like cyber stocks, because we heard about, then there was the story yesterday about DeepSeek was hacked, or 2 days ago. And, you think whenever you hear about things getting hacked and breaches of security, because there's a story out as well late yesterday about OpenAI possibly getting hacked, and that's where DeepSeek got the data from. So the cyber stocks, I'm just going to bring these up because this is one over another. But if you look at what happened with the cyber ETF, is back at new highs. Look at the internet ETF, which has got, like, of course, Amazon and Meta in it, but that's at new highs, like completely unscathed and actually doing extremely well. Remember this company, CrowdStrike, boom, out to new
all-time high.
So, I mean, this is a very interesting, this is to your point about the buy the dip, the CrowdStrike, that when this crisis happened with CrowdStrike, I mean, it has steadily just been going up, and it's the first time it's back to new highs.
I just want to make one comment just before you follow up on this. The retail, versus institution. thing, and just going back to the floor days, like the institutions would come in with the big order, right? And boom, I'll sell 1,000 at 6,089. And the locals, boy, they'd be offering it at 3/4. They'd be offering it lower. They knew that the institutions were there. And it's funny, how, now it's kind of reversed. Now the locals or the retail, they come out with the bid. We're bid Reddit. We're bid like this. And then the institutions are like, oh man, locals are running this market, retail's running this market, and they do it. So it's a combination of factors. It's just being able to identify the turns, when the liquidity buys up. And the institutions, a lot of the institutions have access to a lot of the order flow in the retail.
Oh,
So
for
they,
sure.
yeah. So they, so not only do they see it coming in, they see when it's, subsiding, and they get to take the other side of the trades too. So
I
it's
mean,
a real
TD, TD Ameritrade it communicates all that information. It talks about what the retail trade, what their traders are buying, what their traders are selling. I mean, it's important information to understand, but you can clearly see, what the overall strategy is. It's like a sexy story, and we buy the dip on the stocks that we have sexy stories for. And, maybe one day that doesn't work. We saw obviously 2020, it all burned down. But I mean, it's like most of the time that works. I guess we got to just follow what works most of the time. CrowdStrike was the retail darling, the king of cyberspace. They liked it better than Palo Alto. And then the whole thing happened, obviously with the breach, and the stock got murdered. What happens? They forget, so it's down for a few weeks, and then they start buying, and they can't stop buying. Lululemon's another one. Another one that fell out of favor, but it was a retail darling for a long, long time. And you know what? Eventually that story starts to catch on again. And then there's the opposite stories like Nike. Retail hates Nike. Retail, do you see anybody in your Twitter screen talking about Nike? Maybe there's a couple of value guys that are stuck with their value hats on, but it's just not a sexy story. Everybody talks about the demise of Nike. Well, you know what? It's like almost self-fulfilling. Even though maybe the company can start to turn it around, it's like it's hated. General Motors is the same story. GM, awesome earnings. Guidance, fantastic. Stocks trading like, if you get that $12 number, the stock's trading 4 times earnings. I mean, it's so cheap. If I was GM, I'd take the company private, honestly, at this point in time. But you know what? I don't own any GM. Why don't I own any GM? Because the story is just hated. It's honestly the Tesla story. That's what's liked. Nobody likes the General Motors story. Nobody's like, oh yeah, General Motors, this is it. So I mean, it's all about finding the story that retail gravitates to and buying the dip on those companies. That is what the market we're in.
So two things. Like, this is a great comparison because Tesla's going to be reporting after the close today, but the charts of between Tesla and GM are polar opposites. Also, you mentioned Nike. Look at Joel, if you could bring up the chart of ONON and Deckers.
Oh yeah.
Yep.
And the difference between, because I've heard people say, because this is sometimes where buy the dip doesn't work. Nike, I've been hearing about buy the dip for about 4 or 5 months. And meanwhile, ONON and Deckers are the leaders, and they continue to work really well. And if you go into a store, I've said this before, if you go into a sneaker store, you're going to see a lot more shoes that are made by Deckers and ONON versus Nike. So there's a little bit of a difference there, but do we want to preview Tesla now, or do we want to
Before
wait?
you go into that, I just want to continue this conversation because it's important. It's so important. Retail likes the Momo names. They like momentum. They don't like it. A lot of them are not contrarian traders. Yes, they buy the dip. That's a contrarian strategy in itself. But they buy the dip on stocks that are usually trending higher. Christian, to your point, I mean, you've gravitated to this overall strategy and perfected it, I would say. Moving into Momo names, looking when they're hot, knowing that retail is going to push these things higher when they look good on the charts. So, I mean, it's something to think about. Not being a hero, not trying to catch the falling knife, not trying to call the turnaround story in GM or Nike, which never seem to come. Ford turnaround story, that's never going to come, it doesn't appear to. And it's cheap on a valuation perspective too. But just because a stock is cheap doesn't mean that every retail trader wakes up and says, oh, look, Ford's cheap now. I'm going to go buy some. There's no sexy story here. And then the ETF effects are a whole nother animal we didn't even talk about. Are you launching an ETF? We're going to buy. We're called the Ford GM ETF. We're going to launch all these old companies, that have, overpriced, employees, but you guys get paid a lot. And we're going to launch this, and this is what's everybody's going to gravitate to. No, every ETF that launches is Nvidia and AI and all kinds of cool, sexy stories. And that puts more demand on those stocks. So the story isn't just important, it's everything. That's what this market is. It wants a story, and those are the stocks that goes. And if your story is ice cold, those are not the stocks you want to own.
I have some breaking news. You know who I always told you about at the gym? All I see is these people wearing these On shoes. Well, I bought a pair. A pair.
Did you?
I do. Yeah, I should
Are they
go get
good?
them. Yeah. Well, you have different classifications of shoes? Well, do you have like kick around shoes? That like they're not really tennis shoes. Like when you you do it. So I bought a pair of. They're really light. They're really comfortable. They're slip-ons. I don't have to tie them. I mean, they weren't cheap, but yeah, I hopped in there. I'm going to be part of the next earnings report. So, and I didn't even look at Nike. I didn't even look. I was a Nike guy. Well, at first I was a Puma, and then I was Adidas, and I've tried them all. But man, yeah. So and that's going back to your obvious trade, Dennis. Michael Crockett, I think he's been on this on train for a while. But any reason? I mean. Why are we tanking here? I mean, we're absolutely falling out of bed.
We're leaking a bed. I mean, tanking is a very strong word after we
I
had
shouldn't say that.
The rally we had yesterday, again, pretty incredible. We basically almost filled the gap on the S&P. QQQs ripped higher. I mean, nothing goes straight up here, Joel. So, yeah, maybe a little bit nervousness ahead of the Fed. We do have the Fed coming. The Fed meeting coming. A little bit of nervousness maybe there. But overall here, this market is just relentless.
Dennis, do you want to talk about DeepSeek for the next 15 minutes?
No DeepSeek talk. But what, Baba? Do you want to go into Baba here? They got an AI headline?
Yeah, they do. They do. The actual headline, if I can pronounce it correctly, is they're just getting into AI. They got a better mousetrap than DeepSeek.
Of course
right?
they do.
They have a low-cost model, right, that is just so much better. It's called Quen, 2.5 max MOELLN, which says can outcompete DeepSeek V3 benchmark like, I don't even know what the hell these words means. But Baba, look at that day yesterday, added on it again today. Has China turned, Dennis? That was one thing you talked about was, these tech stocks trading at low valuations, our tech stocks trading at high valuations. Is this what's that one guy, the big hedge fund manager that loves this? Is what's his name?
There's a bunch of them that love China. They had the big short guy on there yesterday, and he said Baba's at 3x is what he said. He said Baba could go up triple from where it is and still be cheap right now. I mean, Baba started popping when he said that too. Go ahead and throw it to Christian first here. Thoughts on Baba, thoughts on China, because we've been trapped in here before. Is this another trap? It's a trap.
I mean, that's what it's been, right? I mean, so it's very difficult to say like this is going to be the turnaround. I try to have some levels. If it's okay, I'm going to share my screen one more time here.
Yeah.
And I want to look at, there's a level that I'm watching in KWeb. Also, one thing that I noticed, and sometimes this pushes me into some trades here. There we go. There's sometimes pushes me into trades when we see a lot of option activity, and we were seeing a lot of option activity in this particular ETF, the KWeb ETF, which is the China Internet ETF. There was a huge block yesterday. Let me see if I can find it, because I did go long some China yesterday. I was like, that's too big of a trade. This was a couple minutes before the close, but meanwhile, they're all afternoon. Yesterday there was buying going on in Baba and calls. There was buying going at some PDD. There's a couple different names, but also they were attacking it through the ETF. And when I see that, when they're attacking option flow with the ETF and with single names, I like perk up and say, okay, something's going on and I'm not going to miss the boat. There was 15,000 of the May 36 calls that traded a couple minutes before the close yesterday for about $2 million. So somebody was positioning in the May 36 calls. That's right up here, 36. And like, that's a logical move to me. Like if you're going to play this, and you kind of have, like, I wait for that a little bit of momentum or a little bit of spark. I don't make calls and say, oh my God, like China's going to be the theme this year. So my level to trade against, and here's the answer to your question is, what do you do with China? Well, I wait till it goes over a particular level that I'm watching. So this is 30.59. As long as KWeb, and I'm looking at a weekly chart, so this weekly candle is not complete yet, so just keep that in mind. It's a developing candle, but as long as we're above 30.59, I'm going to take a shot at China, and if it breaks back below, I'm going to say that's my, just have my stop just a little bit below that, and then if it breaks back below that, I'm out. And this way, it's a very unemotional, because all of a sudden everybody starts, like, Twitter gets ablaze with oh, Baba's going to be the next big thing. I don't know. And I don't think anybody really knows about China names. Nobody knows about China names because it's a different type of country. It's not a democratic country. So you've got to have some type of a system. So as much as the folks on Twitter think that they know about China, they don't know a damn thing. And only China knows what they're going to do. So I trust my levels. I trust my system. And I'm going to say I'm going to be long versus this level and go from there. So here's KWeb. I'm long. I did get long. Yes. Right at the end of the day yesterday. And Baba, Baba's actually was showing a little bit more life. 87.86 is the level that I would be long versus for Baba, because it is a nice base. I like these after a long decline, base back and forth, back and forth. You just have to be careful because there's a lot of stops and starts with this stuff. Sometimes it, like we saw last year, here is a move up and then it came right back down. So when you've got this pattern going on, eventually you would think that this will break the base and go higher. So you just kind of have to be aware that there's going to be some starts and stops, but I say give it a try versus a stop level.
I've been in Baba for a long time. I sold half my position when I had the ridiculous run back in October, and I wish I would have sold the whole thing. I reloaded the entire position back at 81 because I've been talking about the Baba 80 to 81. So I'm fully invested in Baba right now. A lot of me says I should sell it at 100 today because I'm probably going to get another shot at 81 again somehow. I mean, one, let's think about tariffs. Yeah, he's been light on China. Yeah, he's only talking 10%. But is there going to be more talk of hitting China harder? Probably. So, I mean, that can knock the stock down. The AI story in China is real. This is the opposite. So, I have this bearishness that says sell it. Trump probably knock him back down. We'll get another shot in the 80s. Then I have the bullish theme that says, hey, I hear Tepper. I hear the big short guy. I hear, lots of people talking the valuations. They're ridiculously cheap, and these are awesome AI companies as well. So is there the potential that the market eventually takes note? Absolutely. Is there the potential that Baba could go 150, 200? Yeah, there is. Am I going to get another shot back at 80? Maybe. I don't know. So, I mean, part of me says maybe lighten up. Part of me says maybe I should, be more invested in China. I have two stocks, Baba and Baidu. I've talked about them. Baidu, I was way down, and my average cost about 91 bucks. Went down like 77 a week and a half ago, and I'm like, man, this stock sucks. All of a sudden, I'm back to even. Baba was the same thing. Week and a half ago, it's like, oh, I'm back to even here on this damn thing. And now all of a sudden, boom, everybody loves it again. I mean, it's the ultimate sell the rip stock. If we're going to stay in the fade trade market, I probably should just sell the Baba and Baidu right here, because I'm probably going to get them back. Yeah, I'm torn. What do I do, chat? Do I sell Baba or not? I'm torn. I talked about it yesterday. I tweeted it. I said, Baba at 100, it's probably a sale. It's here.
And I think what you do too is, like, you don't have to stay anchored to like, oh, I'm going long China. Like, you could trim, just like any other trade, you could trim a little bit into strength, right? And the chat is selling, I like sell half, right? I mean, perfect. You're putting some money in your pocket because it is an unknown. We don't know about tariffs. We don't know about all these things. I'm going to give you back your charts here, Joel.
Okay.
But I think there's just like any other trade, you've got a trade that starts to work, you trim a little bit. Right, especially because if you go back to, through the KWeb, remember how much KWeb went up last year. If you didn't lock in some of that profit, now it's basically returned back to where it was a couple months ago. So you got to be dynamic with these things, and the chat's weighing in, which I think is very good.
Yeah, I think, that's what I did before. I didn't know what to do when it was at 110. So I'm like, I'm going to sell half. At least, I took a piece off. And then, if it keeps going, at least I'm still participating. It might be the thing to do again. I wish I would have sold all back in October because I could have reloaded the whole thing. So, I guess it's if you're glass half full or glass half empty, because when you sell half, you're either pissed off either way or you're happy either way. So if you stay optimistic, glass half full, you're happy you sold half and it's still going up, or it goes down, you're happy you sold half because it went down. That's the way you got to look at it. But
Dennis, I like this.
Call.
I like this move. I like this move a lot better. This recent move than the move that you had in September.
Why?
And I know why.
Why?
I mean, because and I know it trades overseas, but it was just gappy. It was just news gap go, news gap go, and this is like when it came all the way back down. It came back to the area where it originally launched from, the $80 area. And it just seems to be like more of a constructive rally. It doesn't, it's not as hype and it's not as fast. So instead of like rushing out at 100 today, if you get the shot, let's see if it can like build a base in this area. You're way away from 90, right? Let's see if it can build if people are willing to step up at 97, 98, 99, then you think you got it. I think in the environment that we're in right now, who knows if a Trump talk could come out immediately, but it just feels like now people that missed the original run up in September came all the way back down, and they missed it again when it came back down to $80. They're like, I am not going to miss it this time. I just feel like let the support move up, build another base. 100's a good area. I see why you're talking about it. There's a lot of congestion at that area, so we'll draw a line right across here, like the 101, 102 area. But it's important that to build a base. And in Nvidia too. I know we're going back from yesterday, but when I was looking at it, I'm like, is it going to put a double bottom in? And then I was talking to the guys from the Cortland Economic Report around noon, and I'm like, wow, a double bottom in Nvidia. Then I looked at the stocks, and the stocks did the same thing. Boom, that didn't rally as much, but got to build that base lower in order to move higher. So I kind of want you to hold on, but do what you want at $100.
We did get a nice $9.99 donation here from Chris. Thanks, Chris. Appreciate that. Chris, if you got a ticker that you'd maybe like the guys to look at, throw it in the chat. We won't be able to get to it in a little bit. 10-minute warning for our guest here. Wanted to pitch the idea if you guys wanted to preview any earnings real quick, or there was an Apple downgrade that I know Joel really loved, if you guys want to talk about that.
Well, let's talk that Apple downgrade. Obviously, the stock has been unbelievable. This was the opposite. So this was definitely, I'm telling you right now, just that they were selling all the chips and they had to buy something else. ETF effects here at work, driving Apple from the gutter up to, get more than half of its losses back in 2 days. That's an incredible move for Apple. So Oppenheimer must be looking at this and just saying, hey, this is, a pretty ridiculous move here for Apple. We were thinking about downgrading. We're going to use this opportunity to sell the rep, which they absolutely are. It's Martin Yang from Oppenheimer, downgrading the stock to perform, not to sell, just from outperform to perform. Said they're lowering their EPS estimates to 4%. Based on reduced estimates for iPhone sales in the next 12 to 18 months. Apple trades as a staple to a certain extent because it is. Half their revenue, more than half the revenue comes from iPhones. It's kind of like a staple here with a little bit of potential that they could eventually get, the AI kicker here. But it's been a pretty big move. Now, again, depends on the market we're in here. But just remember that negative correlation, which did not work so well yesterday, but was working well up till yesterday, is still in play here, that this stock sometimes moving opposite the overall market. Christian, thoughts, Apple?
It was such a big move. We were talking about it on the show yesterday about how Apple was the first, was a really nice mover a couple of days ago. But look at the follow through this thing had yesterday. And again, we were just talking about that rotation within tech, and Apple was on the right side of that rotation.
Yeah.
Now, again, these analysts have been all over and bearish on this. I would not, when I looked at Apple yesterday, because I was watching so many other software plays and I was watching cyber plays, that at the end of the day, I saw Apple and I was like, holy cow, I missed this. I missed the follow through for that one. Now at this point, when I looked at it yesterday, like I was like, I would not be chasing it here because there's a lot of negativity in the stock. So that was a kind of sell the rip if I was in it. And I think ultimately it's going to come down to earnings with what this stock does next. But
For
Joel
sure.
also made a great point with these downgrades too. And Apple is, Apple, or sometimes they talk about weak iPhone sales, and then they usually come out. It's a better thing that Apple falls apart a little bit into earnings, because ultimately I don't think they're going to show that much weakness. They're gonna have some lever to pull that says, oh, maybe their app purchases were very good. I don't see Apple falling apart, provided that it stays down going into earnings.
I like to look at the upgrades and downgrades in aggregate, and I'll give a shout out to MoffettNathanson, because on the 7th, they gave a downgrade, right, and that was when the stock was at 242. But how about the downgrade to sell on the 21st? Downgrade to sell. When you sell Apple, that came from Jefferies. And then the same day, Loop Capital, oh no, you got to downgrade it to a hold. And then on the 29th, you had, that's today. That's the most recent one. So this one I respect a little bit more, because
Selling into a rep as
they're
opposed to
selling
like,
into a rep. And Dennis, how about the 50% retracement from 260 to 220?
right to
I mean,
240.
how is that not? And it comes up in a whole number, the whole number theory,
Yeah.
240.19. Holy mackerel! What confluence you have there? But boy, oh boy, what a move! But yeah, I mean, it's like I said, I respect this one from Oppenheimer a little bit more, but those guys piling on at 220, 225, that was a little bit of an overkill here. But now you got to see what 220 to 240. Are we going to hold 230? But with earnings, who knows? This thing will be all over the place for Apple.
Breaking news, DJT just broke at 8:30. Trump media announces expansion into financial services. Fintech. So they're looking into fintech. I've got to think, without even reading further, I've got to think that it's probably going to be something to do with crypto. I got to think that they're probably thinking crypto. I don't know for sure. Obviously, I don't have a lot of details on this here yet, but I got to think that Trump, obviously with his support of crypto, probably thinking with DJT, something with crypto. This is a big headline for them. I mean, DJT needs to find a way. I've joked before, like at the MSTR business model of just flat out issuing debt to buy Bitcoin. It's like the most simplistic strategy that a company has ever had. But obviously, if Bitcoin continues to go higher, it works. I've thought the same thing for GameStop, that if I was GameStop, that's what I would be doing, issuing debt, because it's worked for MSTR. I wonder if Trump isn't thinking the same thing, like start like accumulating crypto. I'm just wondering that. Just my thoughts. In chat, we can throw that there as well. But I think this headline here is very interesting.
Yeah, I think the timing of it's very interesting too. You peaked at 43.46 on the 17th, and you hit $30 yesterday. So timing is everything in this market. Well timed there. I'll just go with
I want to get Christian's thoughts here. DJT is
35.21 50-day moving average.
I don't know.
Is this something you trade ever, DJT?
No.
No.
I skipped this one because I just don't feel like I have any edge, because it moves so much on headlines that you got to be quick, just as we just saw 2 minutes ago.
Boom.
So.
Just like that. The algos are all over the headlines on this stuff. I mean, it's tough. It's up 13%. Is there more move here, more kick here? It depends on the details. Devil's in the details here. What does this mean? They come out tomorrow and say, we're going to start accumulating Bitcoin, or we're going to start accumulating something else. Obviously this Trump coin was very, huge for the Trump family, to come out. And I mean, there's opportunities here for the Trump media group to really utilize Trump's power. And I don't think they're shy to do it. So I probably wouldn't bet against DJT for those reasons. There's a lot of people just say this is zero, it's not worth anything, there's nothing going on. There's a big name behind this, folks. So it's hard to I wouldn't short this. So that's DJT. 835 or guess here, Joel.
Okay. All right. We are going to bring our guest on right now, and
we're waiting till actually, guys. I don't see Moshe backstage
I do see him.
yet.
I do see
Oh,
him.
okay, cool. Oh, sweet.
Okay, let's roll the intro. All right. Good afternoon. Good morning to Moshe Katri. He's over there at Wedbush Securities. He's in the investment banking. Moshe, how you doing today?
So far, so good. Yourself?
Good. A lot of action here in the markets, and we know you're over there in the investment banking realm. And are things perking up there in 2025?
Indeed, they are. Peak M&A activity on the advisory side. The IPO mandates are out there, so there's going to be seems to be pretty active year versus what we've seen in the past few years.
Okay. All right. Well, we could talk different areas of Fintech and IT technology, but we've already had some earnings from American Express. We'll just talk about the entire sector here. Are people spending, and are those companies taking advantage of the money that people are spending?
You know, the trends are looking better. If you look at the card data metrics from the 3-4 largest banks that were reported about a couple of weeks ago, it seems that the growth rate is kind of up by about 100 bips. What's interesting is that the discretionary spending part of the business is coming back for consumers. That's all positive. If I had to point to anything that would be a negative, it would be more about consumer debt and any, the metrics there are actually exceeding what we've seen pre-pandemic in terms of delinquency rates and some of the other kind of metrics that we focus on. So that is probably a potential red flag. In terms of what we're probably going to see in the fintech universe, as I said, so the credit and debit volumes are looking better. One of the more interesting kind of phenomena in fintech is value-added services. So you're seeing MasterCard and Visa focusing more on the ecosystem of product and services that they can build, or they have been building, to be able to, and they're using this as an engagement tool and in a way to pretty much increase revenues per bank or per client. And value-added services was a kind of concept that people started talking about 5-6 years ago, and now it's about 20-25% of the revenues, and that's the fastest growing segment for the networks. For example, you're seeing also some of the other two-sided platforms pretty much kind of using the same concept. Look at PayPal, look at Block, some of the other privates out there that are doing pretty much the same thing. So I think the role of the name of the game in fintech is that you probably want to focus less on transaction-driven business, just because it's becoming more and more commoditized. Some of it is competitive, some of it has to do with regulations. And you want to focus more on selling those value-added services. And some people are doing this better than others. And it's kind of interesting because this is where most of the M&A out there is. You're seeing companies acquiring pieces to kind of build that ecosystem on the fintech side of the business.
So you talked about the value-added services approaching the 25% of net revenues, and you said it's a critical area of growth algorithms. So
Yeah.
Could you just delve into that a little bit? I mean, they're getting down to the algos? The algos are figuring this stuff out and shifting the revenue sources?
I mean, look, it got to a point where Stripe, who is actually privately held, last year came out and said that we're going to decouple value-added services from the rest of the business, i.e., we feel so confident that this is actually going to accelerate growth for us and get us better margins that today you can actually buy products and services from that ecosystem without actually having to use our payments platform. So you're kind of changing the model. You're going from a transaction-driven business, that's your kind of bread and butter, more towards a business where you're actually selling products, selling software. But this is probably, as I said, that's probably the extreme case of where value-added services are going for the space. But yeah, in terms of a growth algorithm, this is becoming critical in my view.
Working capital is very important to these companies, right? There are a lot of them in the earlier stages, and we've had high interest rates. And of course, we have a Fed meeting today. We'll do the discussion. Doesn't look like we're going down a lot. Doesn't look like we're going up a lot. Talk about the impact of interest rates on these companies.
Yep. So working capital as a service or as a product was part of that ecosystem that's being offered to small businesses. I would tell you that typically the size of the loans are pretty small. We're talking about 5,000 to 6,000 kind of type loans because you're talking about SMBs. It hasn't really had any meaningful impact on these companies. On top of that, in terms of credit quality, PayPal, Block, they've actually done a really good job in terms of staying away from any sort of quote unquote bad lending. But that's really part of that engagement tool in the ecosystem. And as long as you're not really focusing on large loans, you should be in a pretty decent shape.
I want to come back to earnings because we haven't really had too many of these names report. We're still kind of
It's coming
early.
up. It's coming up.
Yes, it's coming up rapidly.
Yep.
We've had, just as Joel said, we've had AXP report, and you mentioned as more of these names come out to particularly pay attention to some of the debt levels and so forth with the consumer. But it seems like the consumer is kind of in two buckets. Like the well-off consumer is still spending like crazy. We're seeing that with cruise names go up and so forth. But my question is, do you think that this, is there anything in particular, anything else to watch as we're going to get some of these earnings names come out? And also, are you viewing this as a favorable space right now in terms of the numbers that we're going to get?
The space looks good just because historically there's been anything that has to do with the card metrics data has been kind of a pretty decent indicator for where we are in terms of growth rates for the industry. If I had to worry about anything, Christian, it would be more on the regulatory front. And you can probably, safely say, I don't know if it's safe, but you can probably suggest that under this new administration, the regulatory environment is probably going to be a bit better or more positive for fintech in general. The concern has always been about what happens with interchange. And at this point, remember, we've regulated debit interchange, and there are some concerns that they'll go after credit interchange. And it seems that at this point, it seems kind of safe, quote unquote.
I mean, I've noticed that, a couple of weeks, well, it was at least a couple of weeks back, I heard about the possibility of that the government may go after or regulate the fees that Visa and MasterCard are getting. And I heard about that, and I kind of got a little skittish on the group because that's a big thing. But you haven't heard anything since, and those names have been breaking out. MasterCard had a huge day just the other day. So should you, to me, because I get kind of skittish when you hear about regulation. Do you think that's less? I think, as you just answered the previous question but it's probably a little bit of lesser of a probability that that's going to happen.
That is correct. And the prior administration, as I said, 10 plus more years ago, we've regulated debit interchange. The worry was about credit interchange that gets regulated This new administration seems to be, kind of not exactly focusing on this right now. So we're in a different environment, and I think that definitely helps.
Okay, let's shift over here to IT services, and
Yep.
we could probably talk about that for about 2.5 hours. But the outlook for discretionary IT spending, let's take a look at it. Let's take a look at it as the ramp up.
Yep.
Then you had the pandemic, then you had the decline, and now you have this whole AI, disruption factor. Give us the outlook for IT spending, a short-term frame and a long-term frame.
We've had a pretty flattish 3 years in terms of growth rates in the industry. And a lot of that has to do with the fact that your typical end market or enterprise client was predominantly focusing on projects that helped them bring down their IT costs rather than projects that were more on the discretionary side of the business. And a lot of this had to do with economic uncertainty. And I would say that things are looking a bit better. This is based on some of the indicators that we've had so far year to date. I would say that IT budgets have not been pushed out, which is something that we've seen for a couple of years now. So that these are all good indicators. If budgets are set on time, that means that you'll have funding, fresh funding for new contracts. The real question here is whether the improvement in discretionary spending is strong enough to move the needle. This is an industry that was growing north of 20% a year pre-pandemic. During the pandemic, that number went up meaningfully. Since then, we've kind of troughed, probably flat. So do we spec to 5 to 10%, 10 to 15, 15 to 20? I don't know. But the environment is looking better. Now, Gen AI is disruptive. The real question is how disruptive this is going to be. You can probably argue that this probably takes away some of the more mundane work on a typical project, testing, anything that has to do with the kind of that's more people intensive, if you will. So maybe that takes away about 10% of the business. But on the flip side of it, it probably accelerates projects that are Gen AI related, more related to data, analytics. So maybe that's kind of the offset, if you will. But what's also interesting is that despite the fact that we've seen better revenue growth for the industry, headcount growth hasn't really improved much. And maybe a lot of this is a function of Gen AI that's automating a lot of these processes. So that's another thing that's also going on. And historically, we viewed headcount growth as a proxy for revenue growth in the industry. So maybe we shouldn't do that anymore. But that's another thing that's kind of going on in the space.
Yeah, I guess the whole thing, and you get a lot of debate, with the AI. Is it going to take jobs and drive up unemployment, or is it just going to increase efficiency in for companies and make their margins better? I guess that's the ever ending question here when it comes to AI.
Well, about 7, 8 years ago, when everybody was talking about cloud, the debate was whether this is going to impact consulting or custom software development in the industry. And some people pretty much decided that 50% of the revenue base for the industry will just go away. A year after that, we've seen cloud or the move to the cloud generating a significant amount of integration work for the industry. And, that actually ended up being very positive for the group. So never say never. We believe that Gen AI is going to be a catalyst for incremental spending for the sector. Not everybody's going to benefit because you have to have a certain skill to be able to get this done.
He's Moshe Katri. We're PreMarket Prep. He's from Wedbush. We're glad to have you on today. Great fundamental outlook on two very important sectors. We'll be dialing you up again real soon.
Thanks, guys. Have a good day.
Thank you.
All right. Market, pulling back here a little bit, just off the lows of the pre-market session. But we have anything else going on today, like around 2 o'clock?
think this little guy called Powell, I don't know, is he supposed to make an appearance today at some point?
He's going to do nothing. What do you guys think?
I'll chime in here just real quick. I look at Fed Fund futures basically just to kind of give me a sense of like what the market is pricing in.
Okay.
If we go back, because the last Fed meeting was a huge move that we saw, because the market wasn't. Oh, let me bring up here. I'll bring up a different screen here, and I'll show Fed Fund
Okay.
futures here. Shares present. Sorry, I just have to walk through this here.
You had to add the stage function, right?
Stop screen. Yeah, I don't know that. Hold on one second. Share screen, window. There we go. All right. So here's what we got. This is Fed Fund futures. I'm going to zoom in here a little bit so that you can see that a little bit better. Yep. And there's no chance of anything really happening today. So it's really the guidance. So 2:00 we get the Fed meeting. 2:30 we get the presser. Powell usually speaks for about 45 to 55 minutes with that Q&A, and they're going to discuss like what the future path of cuts are, and you're going to hear a lot about inflation. So right now the market is pricing in. If you look out to March, there's about a 31% chance that again, this is what the market is pricing in. Fed Fund futures, they're pricing in a 31% chance of a cut. So we can debate, like, is that too high? I think yes, that's too high, because we certainly haven't seen inflation come down. We're also going to get PCE on Friday. But what do you guys think? Is 33% chance too high for the possibility of a cut coming in the March 19th, which by the way will be a month and a half away, the next Fed meeting?
I mean, it all depends on, I think they're waiting to see what this administration is doing on the tariffs. I mean, I watched the Trump speech 2 nights ago, and he said like 4 words, and he's like, the fourth one was like, he was like talking about like, life things and like tariffs. We're going to tariff this and tariff that, tariff this. The Fed is paying attention to this, folks. He is talking about like eliminating income tax and getting it all in through tariffs. I mean, this administration is talking big tariffs on everything. So, I mean, if you're the Fed and you're sitting back and saying, well, here's a stock market at all-time highs, and here's inflation, that we think is okay right now, but there's so many unknowns with this tariffs, you're not going to be aggressive in your language today. So if you're sitting back thinking that they're going to get more aggressive with their talk, they're not. I think they're going to be more conservative with their talk. I think they're going to say we need more information. We really need to see what this administration is going to do on tariffs, and then those effects. A lot of people believe tariffs won't increase inflation at all, but the math says it probably will to a certain extent. So, I mean, how much tariffs we get is also up in the air as well. Talking 25% to Canada, 25% to Mexico, 10% to China. Maybe those numbers change. It's just so much of an unknown. The Fed would be crazy to really change their speak at all. They have no new information. All they know is this administration is going to get hard on tariffs, and tariffs can be inflationary. So they're going to stand pat, and they're going to talk just, we're waiting and seeing. That's what they're going to say.
Wait, aren't we supposed to have 25% tariffs on Mexico, 25% tariffs on Canada, changing the Gulf of Mexico to the Gulf of America, taking over Greenland and the Panama Canal on February 1st?
Yeah, maybe. Maybe all that. And 51st day, Canada, don't forget we're taking over Canada too.
Christian, historically, I really liked your question. I think you were kind of prompting the chat. I don't know that we had a ton of interest, but I do want to hear what the chat has to think. But historically, when does this, like, what percentage does the sentiment flip? Like when you're looking at a Fed Fund futures rate, is it just over 50%? Is it like 75%? When do you feel more confident that the market is pricing in, accuracy about what the Fed's going to do?
Well, I'm not sure if it's just accuracy. I think it's just the fact of like, we want to know where the market is right now. And so when Powell begins to speak, and if he is particularly hawkish,
good point,
right? If he comes out and starts saying some hawkish things like, hey, we don't like how inflation looks, and we really have to, we're worried about it, right? That 34% chance that they cut rates in March will drop like a stone. And it will come back to, it'll come back to zero. And like, this is what we saw in the last Fed meeting, where the market was pricing in a boatload of cuts still. And that's why the market dropped so much, is because the expectations were not correct. So as Powell comes out, and that's why it's important, because he's giving you new information, the market is going to respond to this new information, and it's going to respond very quickly. So the reason why I bring this up is because you want to know what the market is currently thinking right now, and they're thinking that, hey, there's a chance. It's not a 50% chance, it's not a 60% or 70% chance, so it's not a high probability. Remember, this market's all about probabilities. So they're kind of like, it could possibly happen in March, we don't know. I think, like, I'm splitting hairs a little bit, but I think I would rather, like, if you're a market bull, you want no expectations of a cut coming, because then the market's not pricing in anything. So the fact that it's about 35%, it makes me a little bit skittish. But I would be really skittish if, like, the market was pricing in like 50% chance of a cut in March, because I think that's completely up in the air. So a third still gets me a little bit uncomfortable, that the market is pricing in somewhat, because I have my own personal take is that inflation, we haven't defeated inflation. Inflation is still around. Everybody's seen the price of eggs. So to Joel's point, it could be something political, right? It's very politically charged right now. Trump mentioned that he wants rates lower. So you kind of have to factor that in. And maybe that's why it's pricing in that high of a percentage.
I think also
I think
where
there's
the
no,
market
like,
is.
go, Joel. Go.
I'm just going to say, and then we can finish up on this. He has some latitude to talk a little bit tough, I think, from where the market is. Like, we're basically at all-time highs. I don't care what happened on Monday, or Tuesday. I mean, we're at all-time highs. So, he could talk a little bit tough. If he would have had the Fed meeting, when the SPOs were down 150 handles on Monday, maybe not. But I think he has a little latitude. If anything, he talks tough, slightly hawkish. I don't see him coming out dovish at all.
No dovishness. And I think Christian's got it like 35%. I think there's a 35% chance that we're going to get lower rates in March. I think the number is 0. I don't think we're going down at all. So, and the reason for that is Christian just voiced it perfectly. Inflation is not beaten. And then we have, an administration is talking tariffs, which can be inflationary. So I say can be. We don't know anything for certain. So I think if you're the Fed, you're just staying the course right now and waiting for more information. So I think it's going to be some not tough talk here, but just kind of the same language. How the market interprets similar language is to be determined. Market obviously wants lower rates. It's not getting them anytime soon. So
if that didn't make things complicated enough with the Fed meeting today, you got a couple of these little companies. Again, I'm using a lot of sarcasm in here. There's a small company. I don't know, Dennis, you ever heard of Tesla? You may like.
I know. No, never. Sorry. I think some guy named Musk runs it.
So Tesla, the implied move for today is about 9%. It's been very wishy-washy in terms of the last earnings results. Like, I always look back to see what the price action was on Tesla, over the last 5 quarters. Last quarter, Tesla went up 22% on earnings. The previous quarter, it went down 12%. The previous quarter to that, it was up 12%, and the previous quarter to that was down 12%. So it's a very volatile name. I'm surprised that they're only pricing in 9%. But that's what the numbers are in terms of what the market.
You know what? Because the Tesla numbers, and this is probably going to be another case. I don't think the numbers are going to be that great, to be honest with you, for the Tesla numbers. I don't think they're going to blow it away. I wouldn't be surprised if you get a dip on it. I would bet fits that description of like a dip that they would probably buy, though. So I don't think right now, saying it right now, I don't think the Tesla numbers are going to be great. I think it drops on the numbers. I think the algos hit on the numbers. I think the dip gets bought. 350-ish, I think people are all over it. I don't think it's going that low, 360, 370. I think people are like hungry to be in Tesla still. The retail trader still loves the stock, the story. Obviously, some people hate it too, but everybody's got an opinion on it. I don't think the numbers are going to be great, but I think the dip gets bought.
But do you think so? I agree with the numbers. I think the numbers will be possibly light. But did you see this thing yesterday that Tesla tweeted out about how they're in their factory? The cars are driving themselves out to like the spaces and so forth, and
That's
that
pretty
goes
cool.
back to the FSD. So do you think that the hype of the new things will overshadow the numbers?
Yeah.
Okay.
Maybe not during the call. Depends what he says. But I think, again, why I'm long Tesla, and it's the biggest position of my long-term portfolio. I think that the story here, and we started this show talking about how important story is. I mean, look at the story going forward for Tesla. There's so many headlines that are just going to be getting investors excited. I mean, to getting farther with FSD, to obviously, the energy business and the humanoids and all that aspect. I think it's just so many potential exciting headlines. And again, still doesn't hurt with obviously Musk's position with Trump as well. So it's hard to bet against the story here. So, yes, valuation is high. Yes, if you just value it as a car company, it's way overvalued. If you start thinking of it as an AI company, though, maybe you can start wrapping your head around the valuation. I stay long because I just think the story is intact.
Just a quick technical note on this. I mean, you had that crazy high at 488.54. You basically had an 80 point break right down, or what was that low here? Wow, that was more than that. That was a 110 point break. And then you came up and you made a much, much lower high on the rebound. So I'm not saying we're going down 110 from 440, but I just think, that rebound off that low got snuffed out early. So that's a look at Tesla. But someone else is reporting too, right? We got Mr. Softy. It's just like a yo-yo. Any preview on that one? And Christian, also a clarification on the 9% and 4.5% each way, 9%. I mean, the 9% is what, each direction, right?
Correct. Yeah, and how you're figuring out the implied move, by the way, you could do this for any stock. All you're doing is you're taking the price of the at the money calls and the at the money puts, and you're adding that together.
Today.
You take that number and then
Closest expiration, yeah.
Yeah. Sorry. Yes. The closest expiration. Yeah. Like the weekly calls. And then you're dividing by the stock price, multiply by 100, and you get the implied move. And that's just what the market makers are implying that the stock is going to move. So what I tend to do is then I look at the previous last couple quarters and think, hey, how are they pricing that? Is that cheap? Is that expensive? So for Microsoft, which I think Joel wants to talk about next, you take the price of the January 31st calls, so that's 980 plus the puts, which is right around the same thing, and you divide that by the stock price of 447, and you're going to get about a 4.3% move. So they're implying quite a bit of a less volatile move for Microsoft.
So, and then the other one is Meta. And Meta, obviously, we can do an implied move here too. And then obviously we're running long in the tooth. But this stock's just been unbelievable as well. Continues to run up. The dip heavily bought 2 days ago. Continues to get bought again, running straight into the report. So bar very high here now. Unlike, we talked about the bar on some of these other stocks, and maybe it's a little bit lower because of the market sell-off. This Meta bar has went straight up. So the bar is high here for Meta. Does it get over the bar? What's the implied move on Meta here, Christian? Do you have it?
7.2%. And
7.2%.
The last 2 quarters for Meta, last quarter it fell 4%, and the previous quarter it went up 4.8%. So, so again, I tend to look for more consistent earnings. When I see 1 quarter up, 1 quarter down, I say to myself, that's really kind of tough. It's kind of like flipping a coin a little bit. But I also think about what Dennis said earlier about like the possibility of like buying the dip a little bit if these names go down just because the expectations is a little high.
We didn't cover ASML. The earnings here were good. This has obviously helped a lot of stocks here this morning trading higher off of this. But just quickly, the ASML report, grab you those numbers there. This was the one stock that we did have that we knew would move other text names as well. So that's why we're bringing up the ASML. It's 684 versus 671 in the euros, and then the beat on the revenue as well. Guidance was higher here too, 7.5 billion to 8 billion in sales versus 7.24 billion. So it was a beat raise. ASML was way up, and I mean way up earlier here.
Way up.
It has come off those highs. It has leaked about half of those gains back. And I think that's a little bit of why the market leaked as well too, as ASML was leaking, because this ASML is really moving a lot of other stocks. It's pulling back here now.
And look at the confluence you had here at the 750 area. If you were up early this morning, you had a high just a few days ago at 750, right on the kisser. You have your moving average just above that at 741, and you leaked off it. So, they did sell the rep.
Can you widen out that chart on your left so that you could see a little bit further back activity in terms of the
on the pre-market?
Yeah, so you go back like a couple days. Notice what happened there. It filled the gap of the big move. It filled the gap and it's backed off, right? So that's the gap, of course, where all the semis went down, the deep dive, I call it. But it is filled the gap to the upside and is stalled there. So I think that 730 level is a pretty good level to watch.
Okay, tomorrow at 8:15, you guys will be tuning in. Great attendance again today. Great input from the chat. Mark Chaikin, he's going to come on and talk about Nvidia and see if he's still sticking with his bearish call. Folks, thanks for joining us here on Pre-Market Prep.